The Federal Reserve has raised interest rates 5 times since the financial crisis, yet banks are still offering low returns on savings. We are turning to Greg McBride at Bankrate.com. Greg, what are your observations?
Everybody needs an emergency savings account, but you can't afford to let this money sit at a very low, uncompetitive interest rate. There are a lot of banks that are still paying a fraction of 1% on savings accounts, even though interest rates have been rising. So it's really important to shop around. The top yielding accounts, which still carry federal deposit insurance, pay yields that are 1.5% or more. And that's really important because you have to earn a rate of return that it gives you a chance of keeping pace with inflation so you can maintain the buying power of that money.
What are you seeing with certificates of deposit, better known as CDs?
You can squeeze a little bit of additional return out relative to savings account by putting your money into a certificate of deposit. But the key here is that you have to be willing to live without the money for the term of that CD. Don't do it if you don't have adequate reserves in a savings account. When unplanned expenses come up, you want to be able to tap the savings account for that, not raid the CD. The early withdrawal penalty will more than offset whatever additional return you may have earned.
What are some of your tips on getting the best rate of return on bank savings accounts?
With CDs, just as with savings accounts, it really pays to shop around. The top yielding CDs can pay 3 or even 4 times what the average bank is paying, and you're still protected by federal deposit insurance. This ability to earn a higher rate of return without bearing any additional risk is really unique to cash investments. You won't find that anywhere else in the investment realm.
Some savings and interest is better than none at all, so thank you very much, Greg.
Thanks, Angie.